Stock market today analysis for Thursday, February number 2, 2023. We're going to jump into these markets after I tell you that there's a link in the description below this video to ihavesuccess.com to help you start selling those cash secured put options on stocks you don't mind owning. Get all these downloads. These two will help you with that. Also, in that same description below this video, there are 3 playlists. One of them is trading options for beginners, with beginners in all caps. There's 5 videos in that playlist. With that playlist and these 2 downloads, you should be in a pretty good position to begin paper trading, selling cash secured put options on stocks you wouldn't mind owning. In fact, if you get assigned, you could be selling some call options. And at 1 minute and 30 seconds of this video, so in about 30 seconds more, there'll be a link right up here to a video that gives you 5 reasons why you should do this. Now, I'm letting you know it's at 1 minute and 30 seconds because you don't have to watch it right now. You can come back. It's easy to remember, 1 minute and 30 seconds. In fact, there's about a 5-second countdown to 1 minute and 30 seconds. And here we are, right here. See it, that 1 minute and 30 seconds. It popped up right there. So I repeated 1 minute and 30 seconds about 130 times. Okay, a little shorter than 130 times. But you get the picture. You should be able to remember that. Now let's look at the futures markets here. We see the VIX futures candle was up today. This little boop, that little thing. I don't know what's going on there. It is a doji right at the moment. NASDAQ. What am I saying? NASDAQ. ES. S&P 500. We see it had potentially a topping tail. Things can keep moving higher. This is the new candle. It's opening right where the this candle closed. It's opening right about there. It could go up. And what do we have going on with this Dow Jones Industrial Average? Had a down candle today, and look at that indecision candle right there. But overall, kind of going sideways. Up there, sideways for the last couple days there. And over here, NASDAQ looking very similar to the S&P 500. Now, if we get in both of these indices or whatever, futures market, whatever they are, overall, if the NASDAQ and the S&P 500 have back-to-back candles where you got this high wick to the top, then we might see a little bit of a pullback. Over here at the Russell 2000, and we have had a nice, pretty strong bull candle today, and not that much of a wick sticking up to the top. And same thing, we got a candle, a green candle at the moment, opening right over where it closed. 10-year Treasury yield has continued to sell off, touching that 200-day moving average. We'll see if it's going to blast through it or stay above. Crude oil floating back down here to 75, but obviously still in between these 2 ranges, almost smack dab in the middle. Natural gas floating down even lower. Right here was our most recent wide body candle. Everything else has been a little bit just kind of slowly falling down, but nonetheless it has been falling down. And gold took a dive over here today, and now we're opening up at the bottom part of this candle. So we want to see if prices, which way are prices going to go. If prices start going up, we want to see how many days it takes for gold to regain this. Like, it might be, we might have this green candle, big sell-off, and then if prices, boom, bounce back up there, or is it going to take 5 days, or is it never going to get up there? Are they going to start going back down? This one is really a politicized instrument over here on the gold futures. I'm not going to take the time to try to explain that because I understand it in theory more than I understand the simplicity to explain it. And I guess it's my understanding has come from, and maybe I first started paying attention to gold and silver around 2006 or 2007. So it's been, quite a few years of learning about various aspects of gold and silver, and uh, you can definitely dump. You can short a lot of shares of futures contracts to push a price down without having to actually own physical metal. So it's a little bit it's easier to finagle this price than it is to finagle the price of an actual physical ounce of gold or silver. Speaking of silver, wow, it's really just been going sideways, so sideways. Bitcoin has kind of been doing a little sideways too, but it's over that 200-day moving average, and I want to say it's looking strong, but it definitely seems to be building a base. So maybe we will see it continue to go up or continue to go sideways. There's a third possibility it could go down, but your good buddy Brent doesn't have the freedom to trade it very easily. So that's about the most I'm doing, is just kind of taking a peek at it. Speaking of taking peeks at things, let's take a peek at these general markets, minus these three. We already looked at these. TLT 20-year bonds moved up today, right? Even though it's a red candle, it hit an all-time high today. Well, not an all-time high, but a high per the last about 30 days, 20 days of trading. And just battling that 200-day moving average over here. UUP, the dollar, overall has been selling off. We went sideways for a bit here, and it's just kind of losing some strength. Had a nice thing is it regained these this price, right? We talked about gold, dropped down. The very next candle, it opened a little bit lower in the bottom 50%, but prices rallied right up to the top of there, which isn't saying much because here would be a big candle. How long does it take to get back up there? Ooh, lots of days so far, and it's still below that. So looks like maybe the dollar continuing to go down. The VIX, even though over the last I should count these sometime and figure out if it's exactly 30 days or how many candles here, 20, 30, whatever candles, it's continuing to go down, but had a upward movement today. And so until it really gets like over the 20 and stays over the 20, no, whatever. It just got up to the 20 many times. I don't know if this many times, but you see several times, and fell back below. SPX, it's really been on a tear. Look at that, gapped, a little bit of a gap today. Gap open, not the strongest candle. It'd definitely be different if it gapped and it looked like that or that, but that's still pretty good. We see the Dow Jones had a bit of a sell-off, and prices came all the way down here, and buyers pushed them up here. So it just kind of closed from open from here, closed over here. NASDAQ also gapping up today. Quite a bit of a bigger gap on that, and over the last month-ish of trading, prices have just gone up. Now here, this is really showing some strength right there in that Russell 2000, right? I don't know if you want to call that a gap. That's definitely a gap. This one seems like it's a gap, but price is traded. You can see the high of that candle, but nonetheless, prices opened a bit above where yesterday's prices closed, and you got a much stronger of a candle right here. So we still got some things moving up. When we look at these 12 sectors of the stock market, no surprise that technology stocks gapped up just a bit. Healthcare continuing, even though we've had 3 green candles in a row, it's continuing in this trend of going down. So much to the point of going down that I really have been spending some time looking for some stocks in the healthcare sector that your good buddy Brent would like to start selling cash secured put options on. And to be quite honest with you, I found 2 so far. So I got 2 on my watch list, one of which I have been consistently selling cash secured put options on, but I have yet to be assigned ownership of the stock, which I do want, but I want it at the price that I want to pay. So so sometimes I'm taking a little less premium, sometimes I'm getting a pretty good premium, depends when I sell it. You know, if there's a bit of a pullback and I happen to sell it on that day, nonetheless, I've been cash flowing that stock without even owning it. The other one, I haven't started to sell cash secured put options on them because I haven't really done the fundamental analysis yet to figure out what do I think the fair value of the stock is and what is a price that I want to pay. Financials are moving up here, right? You can see them still moving up, even though it's a little bit of a red candle today. And industrials moving up, not necessarily the strongest candle, but basic materials, that really is not the strongest candle, but it's still up. We're going to skip this one for a second. Retail, a little bit of gap up today. You know, the retail sector is just so hot because, you know, what I keep hearing on the news is Meta, Google, who else? Intel, Cisco, I'm drawing a blank. Well, all these companies, they're just hiring thousands and thousands of people. Oh, hold on a second. Someone's texting me. Oh, I'm so sorry. I was wrong. They're laying off thousands and thousands of people. So that would make 0 sense on why retail would be strong, right? Because when there's all these high income earners getting laid off, they're not making $100,000, $300,000 anymore. Now they're going out shopping. So part of my point with my satire here is it's good to understand that the stock market is not necessarily a accurate representation of the economy. You know, maybe there was a time in the U.S. history that it was a more accurate reflection of the economy, but you know, just like, and I'm not saying it with a judgment. I'm not saying that you should not participate in the stock market, that you shouldn't make money when it's going up. No, I'm not saying that at all. In fact, I'm making money in the stock market when it goes up, down, or sideways. Although what I am saying is that make money without being confused. Make money without being uninformed. Be informed, right? Be informed. Real estate, same thing, gapped up, a little bit stronger of a candle here. Utilities, right? Look at that, really almost a doji. And consumer staples, I would like to see more of a pullback. You know, I want to see it breaking this down here. You know, let's look for a good shopping spree in staples. I got my eyes on the staples. And consumer discretionary, boom, popped up. Look at this. Energy is another sector that I partake in myself, just because you know, someone might say, well, you know, they're doing this with oil. Okay, you think they're doing away with energy? You think there's going to be no energy? Zero energy? You think that when you turn the lights on that they're just not going to work? Whether you drive an electric car or a gas car, you think that thing's going to move? The energy's got to come from somewhere. So yeah, I partake myself into some energy, and I don't mind these pullbacks in energy. But it seems like we're breaking this uptrend. If around here was our pivoting point that we're looking at, I get it. Maybe that's I don't know if you want to consider that minor or major support right there, but we got something right here. If it really breaks this pivot here, then we got a case for a different story. But I don't know. Like I have no idea if it's worthwhile, if it's safe, if you'll lose money, but it would at least be worth investigating if we get more of like a little bit of a you know what, no, never mind, it might be too close to giving financial advice, so I'm gonna shut up about that. But I'll move over here to this XLK. Let's take a look at Let's go over to Yahoo Finance. Did I say XLK? I did say XLK. Pardon me. I mean XLC. XLC. So we go over to Yahoo Finance, which is you can use for free. And let's go under here to holdings. We see it's communication services. Facebook. Look at that. Did they not update that? Is Facebook still trading as FB? Yahoo, are you behind the times? And to be 100% honest with you, I did not test this before. I did not check to see if Meta was going to be in there. And now you might say, hey, Meta's not in there. That's Facebook. And you would be accurate, right? So I'm assuming that they being Yahoo has not updated this, and that this should actually be Meta, and that 23.75% of this is Meta. The reason why that's notable is that we see this quite a bit of a gap up here today. And look at this. Announces 40 billion stock buyback. I kind of quickly read through this, and I didn't see exactly when this started, when it's gonna start, when it's gonna end. Maybe I didn't read it well enough. There's not really that much to it. I noticed some of these articles. They're I don't know how this really passes. I guess it's an article, but look at it. It's like that's not even really a full paragraph. It's like 1 sentence, 2 sentence, full paragraph, I guess. 3 sentence, maybe a full paragraph. 4 sentences, 5. It's like 7 sentences. And anyways, this is not a literature course. I'm getting sidetracked here, but here's my point. All right, here's the point I'm trying to introduce you to. Sometimes these shares are surging. Was it really on cutting costs? You know where the cost cutting is coming from, right? Laying people off. Or is Meta stock soaring on a 40 billion buyback? Buyback is great, but stock is overheated. And let's take a look at what the mighty Meta has done today. Let's look at it over here. Wow, well, take a look at that, would ya? Holy macaroni. Look at that. Humongous gap up. So, well, what is this gapping up on? Now, is it gapping up on news? Maybe. But also, what makes a stock price go up? Buying. And what do you need? What do you need to buy? Do you buy stocks on your good looks? Nope. You buy stocks with money. So do you think maybe 40 billion could help push that stock price up? Possibly. So what's the point? What should you do with this? I don't know. Just don't be a sucker. Just don't be dumb. Just don't be saying that Meta stock is going up because everybody loves the metaverse. No. How about at least considering that when companies do stock buybacks, it pushes the price up. Apparently, somewhere around the late 1980s, your good buddy Ronald Reagan, who was a president back then, the same Ronald Reagan that came up with this plunge protection team, sometime around here, Ronald Reagan, the actor, who for some reason, I don't know why Americans decided to start electing actors as presidents, but we did for some reason. I was too young and no one asked me for my opinion on that. But Ronald Reagan apparently, legalized these share buybacks, and so I guess you just want to be clear, like, is this going up on fundamentals or is this going up on some tinkering? And that doesn't mean don't profit from it. That doesn't mean don't make money. That just means make money wisely, right? Make money wisely. Maybe if you were in the stock, is it going to stay? I don't know. Honestly, I don't really I don't trade Meta, so I don't know. I got a different trading style. I don't. I go for stocks that pay dividends, have good earnings. Uh, uh, like to me, if you tell me that Meta is a company that will be around for the next 200 years, that may be true. But you know, what was it? What was on MySpace, right? That that one kind of was a flash in the pan. Well, it's hard to replace this. Yeah, maybe it's hard to replace it, and it was hard to replace Blockbuster, but it got done, right? So there's certain things that I feel comfortable with for long-term holding positions, and so I would possibly trade Meta if I wanted to. Like I don't want to own GameStop, but sometimes I trade GameStop, selling selling options on that. You can do the same thing, but it's not so much about what you should do with Meta. This is really what I wanted to point out to you, right? If you haven't heard about, if you don't understand what stock buybacks do, then become familiar with it. It's something that you should know. It's going to separate. It's going to make you a more informed person. At the minimum, you want to understand that when when companies are putting money like this, when this money is going into their stock, $40 billion is a pretty big number, and that's a number that's big enough to drive that price up. So what do you want to do with that? With this particular situation, I honestly don't know. What I don't do, and I wouldn't recommend being a stock chaser. Like, oh, Meta moved up. Now all of a sudden you're jumping out watching Meta, or you're like trying to trade Meta. Uh, I don't know. I wouldn't do it that way. Myself, like if I was interested in even thinking about trading Meta, I'll do something more like this. Come on. I'll take a look at Meta, and I will take a look over here. I'll take a quick look. Okay, now I see I'm looking at the last 5 days 1 hour chart. Okay, it kind of was going sideways here. Quite a bit of a gap up right here. Right, and here was the most amount of volume in that big gap up, and then it went up a little more, but just kind of went sideways, really, right? The net result here to here is sideways. What's it been doing the last 6 months on the daily? Okay, it's basically been down below the 200-day moving average. I see the volume has been really, really low until, wow, look at that. That's a lot of volume. Is that $40 billion worth of volume? Probably not all at one time, but how many hundred thousands are in 40 billion? You could really maybe dump some money in here and get that thing to really rise up right on the earnings, right around the earnings time. And maybe Meta pays a dividend. I don't know. I just don't pay attention to it. It looks like maybe they're paying a dividend now. But okay, so I see that over about 6 months ago it was around this 180. So it gapped up past this high right here. Right, was that? Yeah, around 180. So gapped up past that high. Now I'll take a look at the 5-year weekly chart. All right, we see this was the high in 5 years. We see it had been going up. Wow, really big drop off right here. So it looks like this 225 right around in that area is a pretty significant thing. So if I was wanting to go long on this and I never had traded this before, I would probably hold off. Like I definitely hold off to see if it's going to pass to the 200, because I see some like clumping of prices here, which is this resistance. And looking to the left, see the same thing kind of happening here. Look at it. Try to get 200 right there, couldn't do it. Tried to get 200 right there, did it but failed. through here. It kind of went sideways, got up to this 225 and pulled back. And look at this, a gap hits the bottom, kind of the bottom of that 200 and really drops down low. Over here we are. Right here, I see a little bit of something there. Touches right there. That's at 200. Right here at that 225, it's all kind of getting clumped in there. And so yeah, so me personally, I would, if anything, if I really wanted to do something, let's just take a quick look at, let's look at selling a put option somewhere down here. Take this just for fun. I have no idea if I would actually do that, but just take a look. What am I, you know, you caught me. I was looking at zero days to expiration. I was trying to find a stock to sell a put option on, cash secured put option with 1 day to expiration. See if there was anything I wanted to buy, like buy or get a juicy premium. And couldn't find anything that was fitting my needs, so I didn't place any of those trades. But let's look at like say 22 days. Anything at like 70 bucks? Nah, nothing around there. Well, what about at 100? Nothing exciting over there, right? As far as the premium goes, it was the highest that traded today was 21. That might not be too bad, right? But yeah, me personally, I try to look at what's going on, start taking a peek. I really I don't know, like I'm not, me personally, I'm not excited to own Meta. It's just, I don't know, for some reason it's nothing that's got me too excited. But I haven't been like this. I haven't been one of these FANG type guys, right? I usually like stocks that aren't as popular, and they're like more fundamental to society, like something like food, metals, you know, like base metals, stuff like that. But anyways, we're looking at a monthly chart now here for 10 years, and same thing. Yeah, that 200, it really seems to be here. So let's see what happens with Meta over 200, around the 200, if it's gonna really bust up through that 200. And bam, it jumped up today. Oh, we see the premium for the option is down. It's really in the green spot. What's the implied volatility? Do I even have Meta in there? Let me see. Plug it in there. Implied volatility. Look at that. That's some crappy implied volatility for that much of a jump. Look at this. GameStop, 114 implied volatility. You can get some juice way away from the money, right? Even this crappy car manufacturer's got higher juice than that. And what do we got? Look at this. Okay, so had been riding above these different moving averages, and man, it just really took the squeeze over there. So that's great. And look at this. All right, so hey, it's let's see what's gonna happen. This is a volume profile, and you know, it's a lot of the stuff that I look at, I think is like, it's basically the same thing over and over, but just from different angles. Looking at volume, moving averages, the price, and this is just basically telling us where a lot of transactions have been. So when you see a lot of coloration in here, it means like there's been a lot of transactions in here, not as many in here. This one has had the most amount of transactions in here, so it gapped up between that. So maybe it could go a little bit higher. I wouldn't doubt if it would come around here. Look at that 200. All right, it's right in this hot spot here. And let me show you this way. Kind of right in there, right in there. Maybe it'll go. We'll see. Also, something that could happen is if it falls back, could fall back to maybe like this 1 160, 164 or something. And let's look at the weekly real quick. So on the weekly, yeah, I wouldn't. It could stay anywhere in here when you're looking at the weekly. There's like high volume in here on this weekly chart, but right through here, what is that? What prices are these? It's like 180 to 160 something. So yeah, maybe it's gonna break above that 200. If it doesn't break above the 200, I want to doubt if it floats back down to about I don't know, somewhere between 180 160 right in here. But again, I don't know. One thing, like, this is not the price of stock I normally trade, because I can just trade it, do some option plays on it. But ultimately, I like to stick to, for the most part, not 100% of the time. Like there's a few things like GameStop. My buddy Danny turned me on to GameStop because it has such high volatility, and I can tend to get some premium away from the money. But for the most part, I enjoy, even if I'm just doing option trades, I enjoy doing option trades on stocks that I want to own. And that's just me. I like the idea of getting dialed into less stocks to really learn the personality of less stocks. But that's me. I learned that from Phil Grande, and ever since then, it's been something that I really have stuck with over time, and it works well for me. So what do we see going on here right now? Right, so market has been moving up. At the moment, we are definitely not in a down market, and as far as if we're going, to me, we're still in the sideways market, right in through here. And for me to begin to reconsider going into the bull market, which, just to be totally frank with you, I don't really give two rats tails which way it goes, up, down, or sideways. I really don't care. I'm personally, what I want to do is I want to look at the information that I'm given and just try to make my best choice out of it. And I would think that it's got to get above this 120-ish area. I don't know exactly, where it is, but I look at these different places where it reversed before, where it caught up. Okay, that's about 127, somewhere in there, 127, 126. Where was it? Right in here. Right there, it's about 123, 124. Where's this point? Right there. It's at 134. So somewhere between, like, did I say 120? I'm so sorry. I was saying 120. 420. I bet you're laughing at that one. Somewhere between like the 420 range to, like, I don't know, somewhere even somewhere in there. And then, for me personally, I'm a net option seller, so I don't cry over missing out on this, because technically I'm not missing out on that. I've been making money this whole time, right? It might not have been this big money directionally, but that's okay. Good buddy Brent found out a long time ago. Bears make money, bulls make money, but pigs get slaughtered. So I'm cool. I'll make whatever money I can make. And with that, my friends, I'll leave you with this last thing, right? If you really don't have a clue of how to look at this stuff and have an idea of how far something might go and how long it might go for and how to protect yourself to the downside, if you don't know how to do that, but you want to learn how to do that, consider starting with a trading strategy that's way less forgiving, right? Way less forgiving. And that is what selling cash secured put options on stocks that you don't mind owning, it's way less forgiving. The reason why it's way less forgiving is basically because Generally speaking, there's only two things that can happen at expiration. Your option expires worthless, or the option expires in the money. If it expires worthless, you keep the premium you initially took from selling the option. If it expires in the money and you're selling cash secured put options on a stock that you don't mind owning, then you keep the premium that you initially took in from selling the option, and you take ownership of, at the minimum, 100 new assets. Because when you sell one contract, you're selling on 100 paper assets, 100 shares of a company. So you got to pick your company wisely, right? You pick the company wisely. And that's a fantastic feeling. You win, or you win. And you don't have to be doing any Charlie Sheen shenanigans and making yourself look like an idiot on national TV in order to be winning over here and winning over there. You guys have a fantastic night. And if I got those celebrities' names wrong, I mixed up those dorks. I don't really care. I think they're dorks.